You know, you look at these numbers, you beat on revenue, you beat on transaction revenue, you beat on subscription services, and subscription services coming in at almost $600 million brings it at more than 42% of that total revenue number. Is there a point in time that you can see in the near future that that subscription services revenue is going to actually surpass that transaction revenue? And how fast can that happen?
Well, first, thanks for having me today. We're really pleased with the growth of subscription and services this quarter, as you note. We grew in every category of subscription and services and reached $599 million, a new all-time high for us. One of our goals has been revenue diversification, and we're pleased to see that mix play out over time. We don't look at when it will cross, Shonali. We look at growth of each of our revenues, diversification of all of our revenue streams. And when I look at our transaction revenue, it does ebb and flow with volatility for spot trading. But what we're pleased to see is continued growth of that other transaction revenue. Base has become one of the biggest contributors to other transaction revenue, and the building blocks are just getting started for lower cost payments. USDC on Base now is free. We're seeing $20 billion of transaction volume of USDC on Base over the last 2 weeks. And so as we think these building blocks come together, we could see diversification of transaction revenue as well. But really pleased with our subscription services performance this quarter, as you noted.
Please double down on that. Base is a relatively new product here for Coinbase. How is that going to start contributing to a greater scale at the bottom line? What exactly are people using on Base that is creating more of a cash flow stream for you?
So just to remind everybody what Base is a layer 2 solution, which means that it sits on top of Ethereum and it's enabling faster, cheaper transactions. And so that has been our goal, driving faster and cheaper transactions to a mission that we have of 1 second and 1 cent. As I said, over the last 90 days, we saw it come down under a cent for each transaction. And what that led to is 300% transaction growth quarter over quarter. This is enabling developers to build new applications on top of Base that can benefit from embedded payments within that application. And we're seeing all sorts of creativity emerge in this space. We're seeing people build new social networks. We're seeing new types of games. Just creativity is blooming on the Base network. And that's what our focus is right now. Driving that developer activity. Developers will then bring users. Those users will drive transactions, and those transactions will turn into sequencer fees that will bring revenue to our P&L.
How long does it take for that to play out? What are you modeling right now, Alesia?
Well, it's early days. And so what we're pleased to see is that we become the #1 layer 2 in terms of contracts posted. So that focus on developer activity is where our energy is right now.
I have to ask you a little bit away from the earnings in the here and now and more about kind of the future, the regulatory future, if you will. We spent the last couple of years really sort of wringing our hands about what Washington might bring on the crypto industry. Obviously, that didn't come to fruition. But of course, this has now become a campaign issue here in the United States, at least. And I am curious as to whether you are still sort of anticipating that you could see additional regulatory oversight come down the pike for crypto.
This has been a quarter of momentum. So we had so much movement for our goal of regulatory clarity this quarter. We are very grateful to Senator Stabenow, to Representative McHenry for their efforts to bring forth bipartisan legislation in the House and the Senate. We saw overwhelming support of FIT 21 in the House as it passed with bipartisan support, and we are really optimistic that we might see continued momentum into the fall on the Senate side. So our energy is there. It would unlock massive potential for crypto as well as Coinbase if we could bring clarity to the United States.
At the end of the day, one thing that's still in the air, Alesia, is this idea of staking. And staking revenue was a meaningful contributor in the recent quarter and prior quarters, to that matter, for subscription revenue. How uncertain is that revenue line based on the current regulatory environment?
Well, as you know, whether or not staking is a security is a matter of our lawsuit with the SEC. Staking is not a security. We offer a technical service to enable our users to stake with our services on our platform. What we're pleased to see is, despite the headwinds of the regulatory uncertainty, we've been able to grow our blockchain revenue over the last few quarters. We believe this is an area that with regulatory clarity, it would unlock capital and investment across the board. One thing that we note is that 90% of institutional investors believe that regulatory clarity would unlock capital and their engagement in the crypto space. And so this is another reason why we continue to drive forward this clarity through legislation, through our lawsuit, and through our advocacy work.
Alesia, now it's been a little more time as well with the ETF launches, the spot Bitcoin ETF launches and the spot ETF launches as well. When you look at the read through for what it means for Coinbase, remember initially a lot of people were worried that it would start to really impact Coinbase's business model negatively, but then you've served as a custodian for a lot of these launches. What has been the ultimate impact?
This has just brought a flywheel of engagement on our institutional platform. So what the ETFs unlock for us is we've been named custodian on 8 of the 9 Ethereum ETFs. We were 8 of the 11 original Bitcoin ETFs. And what we see then is we offer custody services. We see incremental trading from our institutional clients. We've seen growth in our financing business. But what we've also seen, if you look at our Q2 results, is we've seen a higher percentage of our trading volume now come from Bitcoin and Ethereum on our platform in the last 2 quarters. So we have not seen cannibalization. We've just seen this to be the tide that lifts all boats and broader engagement in the crypto space.
I am curious, Alesia, I mean, it's going to sound like a dumb question, so just forgive me, but have you guys talked or had any serious discussions about, I guess, expanding this business, meaning expanding its reach and its breadth beyond just crypto?
What I think is really important is there is so much to do in crypto, and that is where our focus is. That is where our skills lay. And so we are going to be building blockchain native, crypto-friendly solutions. Where there may be overlap with, we can leverage licenses, we can leverage technology that we've already built, we may explore going into adjacent markets, but our heart is in crypto, and that's where our focus will remain.
And Alesia, when you think about the future as well, if you think about the ability for Coinbase to grow through this, is Base going to be the biggest driver in the future, or is there another place investors should be looking at?
We believe that we're going to see growth across our product suite, and that is what our focus is, diversifying our revenues to build into the future of utility. I think Base can be a big part of that. I think USDC can be a big part of that. I think our smart wallets will be a big part of that. But the key here is that we are building the building blocks and Lego pieces to drive forward a future of utility in crypto, and believe that with that goal, we will drive user adoption across the portfolio of products that we have.